Hey folks, Dan Frio here with your Mortgage Minute. So I hope you had a fantastic weekend. I did. I didn't even check my emails yesterday, which was kind of nice. So if you emailed me and didn't get a response, I promise you I'll email you back today. But I had a video that I posted on Friday that got about 3 times the average views that I get. And the reason being is I said a recession's been confirmed. So you might not even really know what a recession is, but you just know it's not good. So what happened was I have a Thursday live event that I had a person on there saying, hey Dan, did you check out this website? It's saying that the second quarter GDP just was released. And I said, no, I didn't see that. So they sent that over to me. I looked through it and I'm like, well, if that's the case, that means we're in a recession. So let me put a lot of this into context and I'll bring you up to speed here in a second. So what in fact is a recession? Well, great question. And I know I do this every day, but I want to explain to you, just because there was a recession doesn't mean that the world's going to end. It just definitely it means just this. Here's the definition. What is a recession? Well, a recession is a macroeconomic term that refers to a significant decline in general economic activities in a designated region. Well, this designated region in this case would be the United States. All right. It has been typically recognized as 2 consecutive quarters of economic decline as reflected by the GDP. Okay. So let's put this into context. 2 consecutive quarters. Okay, let's add these up. Well, Q1 was just official last week. They came in and revised it to its final revision that in Q1 of this year, we were at negative 1.6. Okay, so that means we only need one more negative to be officially, in Investopedia's version, in a recession. Well, the Federal Reserve of Atlanta just came in and said that number just came out on July 1st. GDP numbers are negative 2.1. So if we have a negative 2.1 second quarter GDP, we have a negative 1.6 in the first quarter, that means 2 consecutive quarters of economic decline as reflected by GDP. So that means technically we're in a recession. Okay, so more stuff going on based on this just out today. So I log into my CNBC and my stock account, and I'm getting hammered again. The stock market is down 600 points. Oh boy. Okay, so now we have a recession. Now we have the stock market falling off the cliff. What other economic news is out today? Well, really not much of anything other than factory orders, and they came in triple what was expected. So based on all this, what's the markets doing? Well, the MBS market's right here. So if you guys follow me on a daily basis, you know where we look at the mortgage-backed securities market. It's the bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. So that's why we follow this. So basically look at it this way. As the economic news comes in, it's affecting stocks, bonds, and other investments. Okay, well, in this context, we have the European Union is falling apart as well. Just announced today, they're starting to seek safe havens. The biggest safety piece of the market right now, or the world, is the US dollar and a lot of US debt or US bonds. Okay, so that's why we follow this. A lot of money is now moving into the mortgage-backed securities bond market, as you can see right here. Okay, so this then, let me show you how this works. As this bond price goes up, you can see it right here. The price of the bond goes up. What happens in that case, it drives down the yield. So when the price of a bond goes up, what happens is this yield goes down. Well, this yield is tied to your mortgage rate. So in essence, your mortgage rate's going to go down. Okay, so we have bad news in the stock market, bad news for our GDP, but it's starting to give us some good maybe entry points for those that are sitting on the sideline looking for mortgages or to buy a house more affordably. So that being said, let's go over to mortgage rates. That's why you're here. So this is mortgage rates published by Mortgage News Daily on a daily basis. This is not an individual mortgage company's rate sheet. This is not a lender's rate sheet. This is not any client's rate sheet. It's just the national average that Mortgage News Daily puts together. So they surveyed lenders all over the country. Lenders send in their information. Here it is. So you can go across here. Here's what's happening with the 30-year fixed, 30-year FHA, or 15-year FHA. 15-year fixed. Told you guys it was a long weekend. 30-year jumbo, ARMs, FHA, and VA, okay? So this isn't your rate. This is not any particular person's rate, but let's look at this as the Dow Jones. So if you go to the Dow Jones and you see, oh, it's down 600 points, well, most likely your stock's down. Maybe not 600 points, it can't be, but you know your stock's down. So when we see this, rates getting better, okay? Then we go over to rates, it's reflecting that they're getting better. This is basically what I want you to see. So if you're not locked in, this is where how much better your rate might be, okay? So these are just national averages. So that's why I like to post mortgage rates each day. Again, these are not my rates. This isn't a mortgage lender's rates. These are the national averages, just to give you an idea where mortgage rates are and the movements that they're doing. So if you like my context, you like what we're doing here, and you need mortgage help. So if you're looking to build a house, we have a long-term rate lock that you can lock in now and forget about it. You don't have to worry if rates go up and up and up and up, you're locked in. What happens if rates go down? We'll renegotiate and get you a better rate at that time. Okay, so that's that part of the puzzle. So we have an extended rate lock for those that are building. How about if you're out there looking to buy a house and you're just like, man, rates every day, the rates just keep going up, and I'm in fear of not finding a house before rates hit 10%. Wonder if I can offer you a lock and shop where you can lock in now while you shop for a loan. These are just some of the features or programs that we have available to you. It's now official. My team is now federally chartered, meaning if you're anywhere in the country and Puerto Rico, we'd love to help you. To find out more about me and my team, go to therateupdate.com. Here it is. Gives you all the information on how to get in touch with us, how you can schedule a meeting, how you can apply online, and you can even chat with us over here. So that's my report of the day. I've canceled my 1 o'clock event today, but I'm going to jump in on live today to just answer any questions that are out there. So if you happen to watch this video and you have any questions that you come across over the weekend, please join me at 1 o'clock at the live event. I'll answer any questions that you guys have at that time. So God bless. Don't forget to give us a thumbs up. Subscribe down below. We're about 10 people shy of 23,000 people subscribing. Maybe you can be the 23rd thousandth, if that's a word, member. So don't forget to subscribe down below. We'd love to have you as a member. So take care. I'll see you guys at 1 o'clock. Bye-bye.